Another video. Today we are going to do another weekly market breakdown and look at the stock market. But before we do that, let's have a moment of silence for the US dollar that has just hit a 40-year high. Inflation has hit a 40-year high of 8.6 as the food, gas, and salt cost rises. Okay, and inflation rate sends stock markets into a tailspin as the S&P falls 500. Over 2%, and the NASDAQ100 plummeted to the downside at 3.5%. Now, if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now, if you think that was the end of the line, we got interest rate decisions coming up on Wednesday, and with such an aggressive CPI data that got released, we can expect a 0.75 basis point in the interest rate hikes, plummeting the stock market even further out there as well. Gold has been making some unusual moves here as well. We saw gold very bullish as the market opened, but as the CPI data came out, normally the dollar index is negatively correlated with gold. But one thing to keep in mind, the price of gold normally increases when the value of inflation increases as well. Because we know that it is dollar-dominated commodity, inflation is characterized by an increase in prices of goods and services, which is driven by a rise in cost of commodities and products. As inflation rises, consumers' goods becomes more expensive. Good luck, America. Starting with the NASDAQ 100. Now, if you've been on this channel long enough, you would know I said the market was going to fall at that level. I said we're going to fall to that level. Unfortunately, we were falling deeper. But it's time for an update. On the monthly time frame, what we can see, the market has just dipped below a monthly strong level of resistance. Now, this level over here acted as a strong level of support. Market broke below that, came back, broke above that, came back to test it as resistance. Resistance got broken, came to test it as support. Support held the first time. Unfortunately, it didn't hold the second time. We have this low over here that we can expect the market to come and test. Alternatively, this right here, my friends, is the ultimate downside target. On the weekly time frame, what do we see? Now, if you've watched my video last week, I said that this was a strong level of support. This candle printed, and I said the market was going to plummet to this first level that we can expect over there, and that is exactly what the market had did. Now, on the daily time frame, what do we see? Now, here on the daily time frame, we do have the potential of the market printing this information. Now, after an information, you expect a pullback to the neckline before that continuation to the downside there as well. Now, we do have this massive impulse, and after an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low of the impulse. And you can see we've got the confluence of the 61.8. It's lining up perfectly with a previous level of resistance. Support that is now acting as a level of resistance there as well. The market is also currently testing, about to test strong support there as well. So we can potentially see the market first dip slightly lower and then pull back to that level before starting that continuation to the downside. But however, we have to be reactive and not predictive. We have interest rate decisions coming out next week, so the market could start a consolidation phase here, then going into Wednesday. The market could then dip below that and then start that continuation to the downside, depending on what the interest rate decision is. So it's very important that you monitor price action, especially see what kind of price action we do get from a daily perspective tomorrow. And then from there, you then make a decision whether you want to buy the market to that 61.8 or if you just want to wait for the market to break below that and before the market go and test that neckline. Here the Dow Jones, same thing over here. This market was there. I said we're going to fall that level. We fell there, pull back, but it's now time for an update. Now the market is currently nearing this strong level of resistance that is now testing as support. On the weekly time frame, what do we see? We can see the market is about to create an equal low over here as well. The market is about to test this level of support here in the market. Now, because we are approaching high impact news, we could potentially see the Dow Jones consolidate for the next 2 days before starting any of that continuation. You can see we have that same price action that we have on the NASDAQ. And we can also see that this is also a very important structure that the market had also recently broken above. So we can expect the Dow Jones to dip slightly lower at the start of next week, and then potentially pull back and start that continuation to the downside as the interest rate decisions come through there as well. A pullback potentially expected, but I would not bet on it. But if we do see some bullish price action going, then we can definitely expect the market to pull back in there before starting that continuation to the downside as well. Once again, all depends on what kind of daily close we get, because we still have this structure that we need to take into consideration that I expect the market to go and test before hitting in that level there as well. Next up, we do have the SNP500, similar price action. Market just created an equal low. Again, we can expect a pullback to this 61.8, but here we've got it as a different structure. We could see the market just pull back to the 0.382, because we had this level of here acting as support. Market broke above that, came to test it as resistance, then broke above that, came to test it as support, got broken, all of that supports once again turned the resistance. So from this S&P 500, we're going to definitely expect that pullback over there before getting that continuation once again to the downside over there as well. Next up, we've got the GER30 index. Yeah, on the daily time frame, market is also printing an equal low over here, but on the monthly time frame, we can see how the market had been stuck within this consolidation phase for a couple of months now. Hopefully, we could see a pullback, or we could see the market just start to dump all the way to the downside. Now, based off pure price action, the market is currently testing strong support. We have that massive impulse, but we also have a structural level that the market had approached here. So we could potentially see something like this take place on Monday, or we could potentially see the market jump above that and then just continue that consolidation phase that it had been stuck in for quite some time there once again. Next up, we do have US oil. Now, the analysis on US oil is quite simple. We do have this analysis that I had done quite some time back, where the market was, I expected the market to come and test that, continue from the US oil is expected to increase in value based off exactly where it is now. So we can expect this continuation for the US oil to fill in that monthly wick there as well. Excuse me. Next up, we do have gold. Now, if you look at gold starting on the monthly time frame, we can see how gold had broken above this strong level of monthly resistance, broke above that, came to test it as support. We also have that massive impulse, often impulse. You expect a correction, and if you take your Fibonacci from the low to the high, you can see we're at that 78.6 pullback. So we can even expect gold to increase there in value over the long term. Now, gold still has some sort of momentum to go, but gold is currently approaching a strong level of resistance over here. But if you look slightly left, you'll see the market also printed structure there, and we can see this acted as resistance, broke above that, tested it as support. Support then got broken, and it's now testing it as resistance once again, giving us an indication that we can expect a pullback before the continuation there as well. Yeah, on the daily time frame, we can see gold has just been stuck within this consolidation phase. Now, it's normal to think that gold should be weakening as the as the price of the dollar increase. So going into next week, we could see gold pull back, and then from there we should be able to monitor the price action from here, because we have that interest rate decision coming through. That's the first move. I'll make another update as soon as I get the data from the Federal Reserve on Wednesday. Now, ladies and gentlemen, as always, if you enjoy the video, please smash the like button, because it helps us reach more people out there. Thank you for all the support. Thank you for your time. And as always, cheers for years.